The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And is there a guy that deserves the Nobel Prize more than the guy that invented the mute button? Oh, boy. I don't think anybody knows just the troubles that we've seen in the Tiger's Den lately with the music sometimes that these engineers decide to play. But yes, there's an easy answer. It's called a mute button. And just look at about 6 minutes and 30 seconds after the top of the hour where it's safe to come back into the water and listen to me instead of some of the brain dead music that they decide to play. And they think they're getting me, and all they're really doing, it's like one of these wars where it's not the people that fighting get killed, it's all the people around it. Just the what do they call it in war? It's all the collateral damage. That's what they used to say. It's just the collateral damage that they cause out here. But I'm going to soldier through once again. I know people have had big hardships in their life. Luckily, I was able to hit the mute button before any of my ear and hearing was affected by those songs. But just to be forewarned before this show that they may go full insane and try to damage your gentle brain with bad tunes. And luckily, I'm way ahead of it, and especially today was warned by the members of the Tiger's Den to stay away. As always, I'm your humble, lovable, and squeezably soft host, starting off another day, and actually going to do a little superior dance here soon. But beautiful February 24th. Air conditioning kind of turning on and off down here in Tampa. So you know it's okay. A little foggy out there, but what can you say? Of course, we've been listening to Janet Yellen today. We'll get into that. And for the most part, not a lot of movement in this market. And we were down like 4 points. We're up 4 points now on the S&P cash. Volume is again light. It probably will not return until she's done answering questions tomorrow. Today was her easy day, and we'll get into that also in a minute. But just not seeing and not believing that there is a lot going on until options, pretty much options rollover, probably going to be over today or first thing in the morning. Of course, what everybody's watching tomorrow will be the House grilling of Mrs. Yellen, and we'll get into that, like I said, in a minute. But until then, probably not expecting a lot of movement or a lot of volume. And as long as she can make it through unscathed, the market will resume its normal path. But we've had a few different streams all coming together here. Part of it is options rollover. Part of it is trying to figure out what she really meant when she said something. And then the talking heads on CNBC trying to decipher what she said and somehow turn it into how many angels can dance on the head of a pin kind of discussions. And then everybody will just go on with their lives as if nothing happened. But for the most part, there's a few things going on there that I think were interesting in what she said, and we'll talk about that too. Again, not expecting a whole lot going on. I've got one position in both my long-term and short-term newsletters, but that's about it. I just don't see a lot of wanting to get in front of a market that seems to continue to see lower and lower volatility. I suspect that part of that is the Fed and the Treasury and the central bankers across the United States. We got up to 95 on the dollar index this morning, 94, 99 or something. And boy, did they pile in at 95 to try to hit the dollar. It is a fairly crowded trade, but for the most part, let's see what we have here now. Where's my dollar index? 94.49. We're off 8 cents. But it just looks like they're holding back a dam that will eventually go forward. But they are pretty aggressive at that 95, over that 95 level, or right at 95 coming in. But I don't see a lot of pullback. Of course, we've had some up and down. They actually pushed gold down this morning. It's basically flat out here, but that's pretty much more of the market. We also are looking at crude up 27 cents. They tried to get it over $50, kind of pushed back down. So I'm going to watch how that closes out there today, but not a lot of action. A few things that we talked about yesterday, where I'll do my superior dance. That is, that if you heard this on the show yesterday, that in either today or in a week from now, you're going to see the benefits of listening to my news. As always, when news breaks, we here at TFNN will be there to fix it. But in the meantime, we need a little histoire to start off the show. And it always gets going. All just a little bit of history repeating. On this day in 1982, the first stock index futures began trading as futures contracts on Value Line Stock Index open up for dealing with the pits of the Kansas City Board of Trade. And the rest is history. Now there's futures on just about everything. And what else can you say? People hardly think about a day when there was not an ES future or a S&P future or a NASDAQ future or a future on the futures. Anyway, other than that, pretty quiet day generally over the years on this day, but I do digress. And, of course, I want to thank everybody again for the awards ceremony Sunday night. Of course, not as many people would watch it as the Oscars, but I appreciate once again getting the hands down TFNN award for digressing, and of course opening up the new Lifetime Achievement Award in being a curmudgeon. But I do digress into curmudgeonry. But we shall move on. Of course, Yellen was out talking today, and we can't talk about Mrs. Yellen without getting started and making sure that we give the Yellen prayer every time she comes in front of a microphone. For our Janet, who art in finance, hallowed be the Yellen. Thy auctions come, thy bills be done, in twos as they are in sevens. Give us this day our daily fed, and forgive us our treasuries, as we forgive those that default against us. And lead us not into recession, and deliver us from deflation. For thine is the borrowing, the easing, and the printing, forever and ever and ever. Amen. That's right. She came before the Senate today. She's going before the House tomorrow. But other than dipping back down under 2% on the 10-year for yield, not a lot else happening out there. She was kind of grilled and will get grilled a whole lot more and a lot more savagely tomorrow about whether we can audit the Fed. And I think kind of like that flag, where's it from up in the Northeast? It says, "Don't tread on me." I forget which state that is. But her flag would be yelling, "Don't audit me." And we have a very short clip of what she said when she was asked about whether we should audit the Fed.
You can't handle the truth.
Well, her voice is a little deeper than I remember, but that's pretty much it. No reason to audit us. Nothing to see here. Move along. Don't need to be audited. I don't think you guys want to know the truth out there. No reason to audit us. Just stay away. We do everything just fine. Nothing to see here. Don't look behind the curtain. That's about it. And other than that, I can't think that we saw a lot from her, and that is probably confirmed from the movement in the S&P. But it's a little higher out here. The question is, when will they raise? And I think she put some distance out there on when they would raise, and of course a little bit more foggy on them actually giving any kind of heads up that they will raise. So maybe it's farther out, and maybe they won't give as much warning, and that's that's pretty much what I took from it. Of course, other interesting things, we're starting to go down the road of Europe, and time to go to the mattresses, as they said in The Godfather. But this is a little different this time in the fact that we're going to be shoving our cash into our mattresses. J.P. Morgan is preparing to charge large institutional customers for deposits, citing new rules that make holding money for the clients too costly, according to a memo reviewed by the Wall Street Journal and the people familiar with the plan. But this is kind of the first step to us going to negative interest rates. And why they're not going to move the interest rate so much. They're going to make the burden of holding cash expensive. So we're getting the negative interest rates without the negative interest rate. I think that's probably the best way to look at it. But it's kind of tough to see if this is going to spread, if this is a one kind of time thing, or if J.P. Morgan is just using this as a good excuse to get rid of some deadbeat customers and getting them into stocks where J.P. Morgan can fleece them on the way in and on the way out. And yes, I am a little jaded out here, but what else can you say? Ooh, I just thought of a good title. That's interesting. Yesterday, like I said, I'm going to do a little victory dance. Micron was off. We'll look at it in a few minutes. And also SanDisk. And, of course, the reason that I talked about yesterday was that Samsung is getting a lot of contracts that Micron and SanDisk had for Apple. And I think that's pretty much about it. But I gave you fair warning. I warned you. I warned you. I always liked that guy, the little kid in Mad Max. I think it was Mad Max. The little kid comes running through and he says, they're coming, Dad, they're coming. And of course they all run off, and the dad doesn't know what's going on. Great. Oh, there's a new version of Mad Max coming out too. I wonder if that's going to be any good. Anyway, I'm finished digressing for this segment. We'll be back talking about a little bit of news. We're going to be looking at some short stocks later in the show today. And maybe talking to Andy Eck. We don't know yet. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we were back, we were talking about Micron and SanDisk, both off a little bit today. And I think probably if you missed yesterday's show, we were talking about it before it hammered this morning. But pretty easy to see that, that Micron and SanDisk, that were commodity businesses for 10 years, finally came out of it, of course, with the destruction of a plant in China that competed against them, kept some of the prices down, much like we saw big moves in things like disk drives when a lot of the production facility was wiped out. Eventually, my question, I guess, is probably more like the airline business here in the United States. They've been able to kind of have a Hatfields and McCoy's kind of ceasefire in the airline business. But what happens when they start firing back at each other? Is anything completely changed? And the question is, right now, it looks like probably a little bit of price fixing between Micron and SanDisk, if not implicit, at least understood. And the question is, now that we have Samsung pushing in and the plant in China coming back, how long are they going to be able to hold these higher prices for what is a commodity product? This is not like Intel making a huge processor that is probably the only thing that, the only company in the world can build it and build it like they do. It is a agreed upon standard for memory so that you can second source it, i.e., if you're a big manufacturer like Apple, you may have a big contract with something like Samsung, but you might have secondary contracts with both Micron and SanDisk, and you need to be able to buy the same part from all of them for the most part. That way, if one plant burns down somewhere, you can easily replace it. Same thing that car manufacturers do. They make sure that there just isn't a single seat plant where everything can go south. There's not a single plant that just makes air conditioning compressors. They'll either go through multiple companies, or if it's the same company, make sure the company has separate manufacturing facilities so everything doesn't go up in a poof of smoke. And that's kind of what we're looking at out here, is that SanDisk and Micron and probably a company that they can't go and go bankrupt if something happens, which is probably more important to Apple these days after they blew up the Sapphire making company. But Samsung's already announced, as I said yesterday, it's already going to 14 nanometer system on a chip. At the same time, Intel is talking about their 7 nanometer technology, probably 2016, 2017, maybe even 2018. But pretty soon you're down to the width of a not of a molecule, but even an atom. I think you got 2 or 3 nanometers. You're basically 1 atom wide, and they're basically saying we're going to go 2 atoms wide, and we're going to go high. But I'm going to be writing about that in the Tech Insider this Friday. At least the roadmap for Intel. They continue to be, 6, 9, 12, 18 months ahead of everybody else. And, of course, hard to think that Intel, at least on the processor, high-end desktop processor business, is not a monopoly with the other company they go against and probably going bankrupt in the next couple of years. Hard to think that they can spend any money on R&D and to even come close. And, of course, they have to have their stuff manufactured out of house because, of course, they have no manufacturing capability of themselves. I'm talking about AMD. Also, where's the top on that one? I have no idea. Anyway, is there anything else going on out here? I wanted to talk about the CDOs. I don't think I have a plate for this. I just wanted to talk about it a little, and don't have enough time. After the bell last night, we had some more discussions, and I warned everybody that in the crude market, that when we started seeing all these companies come out, limited liability companies for production out of these fields, pretty much all the way through last summer, that we probably needed to watch out. Probably a good signal that there was a top in crude. That we're seeing this now happen in the solar industry. It's probably interesting. We'll talk more about that when we come back in these solar stocks. One reporting after the bell today and one before. Be back in a second.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, you can always give us a call at 877-927-6648 and talk to our producer, Alan.
Alan!
And he will get you on the air. Just call 877-927-6648. And that will be all there is. But what else can you say? Looking at a lot of stocks out here moving today, so we'll get through some of those. Had some questions in the den. If there's anything else here I can answer. Guess there was the question of whether or not AMD stays in business. And, of course, I was typing to somebody in the Tiger's Den about how Microsoft themselves used the AMD chip in the Xbox One as a way of making sure that they stayed in business. And, of course, if you were around in 2003 when Microsoft gave, about $500 million to Apple to make sure they stayed in business, just to keep everybody off their backs, to make sure that they weren't charged with a monopoly in the computer business, at least in the PC business. And I don't know, it's kind of a double-edged sword out there, but you can, I'm wondering now if the next time someone has an option on whether they can just put their competitor down as Microsoft could have easily done by not giving the $500 million in 2003 to Apple. No one wanted to give any money to anybody in 2003 for anything, whether it was a good idea or a bad idea. Microsoft just thought it was probably a good idea to keep all the communists, especially in Europe and some of the communists here in the United States, off their back for the monopoly powers. And of course, they'd just gone through 3 years earlier the ruling about them putting in Windows Internet Explorer in every product. And they probably pushed the line a little hard and got themselves in trouble. But they, too, did not understand how politicians had started to look at tech as huge money bags. Of course, in 1992, we had a lot of people come in from Chicago, and basically they were criminals. And they thought that there was no end to the amount of cash you could get from anybody for political contributions. And we saw now it's kind of tough to see a business that it's not a daily event where someone has to cry foul or they've been wronged on Google or any of the rest of them. The rest of the Western socialist democracies now look at our tech companies as one big feed bag to go after. And I kind of hate to think that we started it here by a lot of those Chicago politicians that looked at everybody as somebody that they could take some cash out of. But I do digress, and we'll be there. Everybody wanted a little taste and just to wet my beak out here. Anyway, we're continuing to, let's look at some of the movers out here fairly quickly. And Wynn Resorts is down. Of course, Macau just not doing that well. Energy, not all that bad, but of course, you've got a high volume low back here to the December 17th low, 133.58, 4.2 million shares. Also, that level is a gap. My guess is we're going to see that retested once again. Got some of these stocks really starting to look like they are problematic at best. And Worthington Industries, another one. I think most of these are coming out here on earnings. Let me get down to my notes on Worthington. Announced its outlook has changed since it discussed in December's fiscal 2015 second quarter earnings call. Expects weaker third quarter results, downgraded to neutral at Credit Suisse. Also, huge volume. Got a previous low, January 14th, $24.02, 590,000 shares. We got 1.3 million shares today. We're not quite into that candle, but awful close to these big candles down here at the lows. And my guess is we're going to hit those fairly quick in that stock. TRAK, which is Dealer Track Holdings. Also talking forward about how bad the auto industry is for them right now. They sell a variety of software products to track just about everything at an auto dealer. Question is whether or not everybody's got all the software up to date and doesn't need it, or if there's actually a desire not to spend money, or what's going on. They weren't real clear out here. I've always been waiting for the Fed and the Treasury Department to wake up the fact that the lending rules on cars and auto loans have been way too lax. And maybe we're looking for a problem like we had 2008 in houses in cars. I remember driving by a place that had 5,000 cars along I-70 when I was driving by. You couldn't see where the cars stopped. It was kind of like that Indiana Jones thing where they pushed the box way back into the warehouse, and you kind of keep zooming back and back. You just figure out that there's 5 million things that they had in the warehouse. And those were all cars that came back from people who couldn't make loans on them. Eventually, those all found homes, but kind of interesting. Anyway, down on huge volume out here. You got some lows in that 38.5 level for Dealer Track out here, but I would watch and see how some of these stocks perform. I was worried about whether or not Ford could do well long term with their fairly expensive Ford F-150 truck, which is a huge moneymaker for them. So if it didn't do well, it would be problematic. Of course, a brand new truck, a lot of people buying it. The question isn't whether they'd sell instantly, but probably more on how that F-150 starts selling in maybe a couple of months from now. Now that it's been out, the initial demand has been had, and what the run rate is for. When you can look at a Chevy or a Dodge at about $3,000 less. Yeah, does it get 2 miles per gallon less? Yeah, but maybe you can get a few more features in it. A little snappier truck than you could get out of the Ford, and that is something I don't know the answer to, other than the fact that Ford probably at low prices for crude has a kind of a small problem out here. But get a little doji out here on Ford today. I don't know what else you can say. We were talking about these solar stocks, and SunPower is one of them. What's the other one? Is it First Solar after the bell? I think that's what it is. SunPower came out this morning. And I was talking about these stocks that had issues. They were going to get together, them, and I think it's First Solar, are going to get together and put together the same thing that was a cancer pretty much all the first 2 or 3 quarters of last year in the crude market. And that was these kind of joint agreements where any cash that they have coming in is pushed off in another company. And basically they're going to accredit and take all that cash up front, but they're going to sell it yet to another company to hold the bag. Does this not remind you of the CDOs of 2007 and 2008 when they all blew up in everybody's faces? And of course, last year when everybody was selling out these limited partnerships for producing fields in the Northwest that may be producing now. In fact, I'm going to talk to Andy Heck after the show about whether or not there's an article in here about the move to really push off production into these limited partnerships last year. But basically, they were same thing in the housing market, i.e. we're going to take the cash up front and account for it now, even though everybody has 30 years to pay these loans off. We're going to say that we got the cash now. And that's basically what's going on from SunPower and First. I think it's First Solar, FSLR. Yeah. It's First Solar now. First Solar, I think, is after the bell tonight and hasn't come out. The SPWR already has. But both of these popping. And, of course, the idea is that our accounting really doesn't justify our earnings out here. Now, the problem, and one of the reasons why I wasn't short these stocks on the way down, is they had 30 and 40%. To me, financial engineering is a huge red flag that says, if we could just figure out a way to account for something different, then we'd make a lot more money. And the answer is you're making the same amount of money. You're just front loading all the benefits of that cash on the balance sheet, but you are not really truly getting it. That cash has to come from somewhere. And the thought is that, of course, we're going to sell these systems to put up huge amounts of solar cells. And we're going to say these things last forever, and electricity is only going to go up. And they're going to make a lot of assumptions. Yeah, the old refinancing game. It's not. I just can tell you that in a couple of years from now, we're probably going to be looking back at some of these. In fact, I kind of like it because I have a good feeling that those are going to be some excellent shorts. But they're going to talk about Andy after the show about these kind of REIT / limited partnerships for oil production coming out at $100 and $110 for a barrel of crude. And, of course, now somewhere around half that. And maybe look at a lot of those stocks that IPO'd last year. Maybe I'll do that tomorrow. And we'll see if this is not a warning in this sector like it was in crude. But I do digress. Other stocks of interest out here. Steve Madden Shoes came out with earnings. Earnings a little bit better for Christmas. A nice little pop up here today, but kind of rolled over as they talked about having problems with new shoes coming in. Of course, that's all about the strike that was out on the West Coast. It's probably going to be 6 to 8 weeks before everything back to normal for these shoe companies like Steve Madden shoes. But decent numbers out there, so no one's really saying anything bad about it. Just problematic at best. Andy made talk about this stock. I sent him in the chart in this 5 o'clock hour. But Agrium, which is, they sell a lot of things, including fertilizers and seeds. Well, apparently sales are very good. My guess would be that means that there are going to be a lot of planting, which probably means lower prices at the end of the summer when those crops come out. But saying that a lot of seeds, a lot of fertilizers being ordered, and didn't really break it down. Maybe I'll have to go check it out after the show. But it could be at least they're planting a lot. Andy says it's all about the weather. But certainly if they don't plant, it doesn't matter what the weather is at all. But certainly it looks like it is strong. The force is strong in Agrium right now, and at least the fertilizer and seed sales. So that at least they're going to try. We know they're going to show up and try to play the game. Now, whether or not the weather goes to hell in a handbasket, I don't know if we can stand any more global cooling. You all know how I feel about that. ALKS, another one out here. I never can pronounce this right for some reason. I wish people would have easier words to pronounce for the company. Alkermes? Yeah. Anyway, down a little bit. Beat Q4 consensus EPS estimates by 7 cents. Beat on revenues. Guided down below consensus for the coming year. And, of course, just about everybody talking about the strong dollar. And there's nothing new under the sun for that. Down on volume. There's a nice gap out here that goes from about 59 to 63. That gap up actually happened on 5.8 million shares. My guess is you're probably going to see it back in that range. That was a pretty strong day, so you're probably going to look at fairly decent support in that level. And it may take a little while to get back there, but if it comes down there with a lighter volume, probably going to find support in that 59 to $63 level, so you can check it out. The big M out here, Macy's, not looking good for retail. It's again, beat on consensus on its EPS, but sales are below consensus for its fiscal year 2016, and comps in line. And, of course, everybody's saying the same thing. It's the dollar, baby. It's the dollar. It'll make you holla. But it's going to make you holler with pain, apparently, for Macy's, basically saying that the dollar is going to make things a lot more expensive for them in almost everything that they have being made in the Orient. Down on heavy volume, got to $61.10 already for the low today, but it's got enough volume. We're going to see the $60.22 low from December 9th out here tested. And there's a nice little gap out here. There was some decent volume at about 57, and the October 15th low from last year at 54.84. I don't know if you can buy this company as a fund manager, knowing that they're telling you that things are going to be worse next year. But is there enough equity inflation to overwhelm that, or is everybody just going to say they're lying and we're going to buy it anyway? We'll see in the next couple of days. Be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. Going to look at a few more stocks out here. Macy's, of course, we've talked about that as we exited stage left. After the bell tonight, Hewlett-Packard, and of course, this thing's been going sideways for the last few days. They're going to be splitting into 2 different companies. It's going to be like Sybil. I think Sybil had 13 personalities, and Hewlett-Packard is going to have 2. Very unclear about what's going to happen. I think they've said who's going to be the CEO for all the bad stuff. I assume Meg Whitman is going to take control of the good part of the company, but they are going to split this thing up. And I think maybe we're going to get a little bit more detail out here, but also probably some interesting numbers on how computer sales were over Christmas. And what else can you say? They've had a little bit of discussion But certainly the rest of the company's been doing at least okay. So not expecting a whole lot of movement out of this, but you never know when you're going to get the surprise in a big company like this. But I don't know. After the bell tonight, keep an eye on HPQ. Before the bell this morning, Home Depot came out, and a nice little high volume pop. I would like to see the candle a little bit stronger out here for a sign of strength, but certainly you have fairly decent volume out here, especially after the housing numbers that have come out, showing the huge sales in housing that have been kind of tough since the bad weather. And a lot of people are going to say it's bad weather. As soon as weather is nice, we're going to start seeing those numbers come back up in housing. I'm thinking that we probably plateaued. They may not go down, but I don't think they're going up at all. So either flat or maybe down a little bit over the next 6 months or a year. Of course, it's probably going to see real weakness in these if interest rates ever go up. But nice report out here from Home Depot this morning. Let's see what they had to say. Beat Q4 consensus estimates by 11 cents, beat on revenues. Consensus evidence revenues in line. Raised dividend 26% to 59 cents a share. And I think that's all anybody needed to see out here is that there's at least a reason to buy this, which is the dividends are going higher, and or share buyback, or all the other stories of financial engineering to get people into these. Diamond offshore drilling. Did we talk about this one already? I don't know, I'm losing my mind. Down on some decent volume, but not enough so far. Certainly enough to hit the last low of January 15th with higher volume. Now you've got $29 opening up from December 1st. And see my notes on this thing. It's in here somewhere. Disclose a contract termination in its annual 10-K filing. Price target lowered at Cohen. And, of course, a fairly significant move out here, almost 9% earlier today, down from the low. But, this is what, $1.35 over the low from December 1st out here. So, you've got a pretty good chance of these things testing their lows. I don't think any offshore driller out here is going to report anything positive, at least for the next 3 months. And what else can you say? What's crude doing right now? Crude's off of 34 cents, kind of been rolling. I think it got up to about $50.25, now trading at $49.12. We've got the Tom O'Brien show on most of TFNN following this show. And, of course, he'll be talking about that. And then HP earnings in the 4 o'clock hour. Then we've got Andy Heck in the 5 o'clock hour. Maybe he'll talk about seeds and fertilizer and other things like that. See you tomorrow.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.